Rohr here with an early, concise highlight on Thursday, January 29th, 2015. It's currently 7:45 a.m., and we're coming to you a bit later than usual because we wanted to both update the technical write-up from yesterday's global view, and we wanted to see a bit more of the limited U.S. data today. We'll be getting back to that in a moment. And the bottom line is that after yesterday's debacle, which seemed to be on the back of just general concerns about global conditions, the U.S. equities in the form of the S&P 500 are up $6 today at $19.98. Now that's important because, as you can see, it's still clearly below the 200 psychological area, previous minor up breaks 205, 202, and most importantly, the bigger level up at 2013 to 10, the current violated Fibonacci 2/3. What we will also note is on a near-term trend basis, it's important for the market to get back out above this, back into these higher ranging areas where you'll note even on the extreme weakness on Tuesday morning, it held not much worse than the 2013 area, so you can see why it needs to get back above that psychologically, but also on the aggressive downward channel since the high going back to Wednesday morning early, up in the resistance in the 2036 to 40 range. This market has resistance coming down by about early morning to mid-morning into that 2013 to 2009 area. So even if it's higher early by a good margin, unless it gets back out of this aggressive downward channel, which into lunchtime is down around 2,000, it's still in a downward trend. Of course, all of this is reinforced by the degree to which we noted yesterday morning early that the hourly MACD was not above this lower runaway band. And unless it was going to push back up yesterday more convincingly back out of the 2025 to 2013 range, back above 2036 to 40, it was vulnerable, and lo and behold, that's what we got. The lower critical support is back down in the 1985. That was the old July high, in the 78, and we'll explore more about why that is, even though recent lows held down into this low 1980s. And to just discuss a bit more of how important this is, you'll note that there was slippage back to the 1985 area, which is right where the market was parked off to the left, into the December FOMC decision. Well, this was the Tuesday, January 6th, before the release of those FOMC minutes on Wednesday, again held 1985. On more recent troubles and concerns about the global situation, Europe and geopolitics included, the market slipped back for another test of 1985 to somewhat below it. So this whole area here is not just a technical support, which it is, and it's quite important on that grounds, but it also significant psychological support. And now it's time to head over to the intermediate term view to look at a bit more